Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host at Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Mitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Welcome back to the Bitcoin Knowledge Podcast. So we have with us Kevin Zhou, the former chief economist at Litecoin, and we're here to give you the week of August 30th to September 5th update. So Kevin, what's been happening in the Bitcoin markets and news-wise this week?
It's been a pretty slow week in the markets. For the most part, the prices moved sideways. In terms of actual news, I did hear something about Barclays seriously looking into using the blockchain for something or other. I don't think they're too interested in Bitcoin, but they like the technology, quote unquote, back in Bitcoin, the blockchain stuff. So that's been happening. And I just read something recently that UBS is also, internally building out, some type of blockchain applications. So it does seem like a lot of banks are interested in it. It'll be interesting to see what sort of things they come out with. Likely going to be, permission ledger type stuff, for, keeping track of all different sorts of assets, on the blockchain, digital rights, maybe something like that, custodianship through the blockchain, stuff like that. So it'd be interesting to see what comes out of that.
Yeah, it's interesting because a few weeks ago I went to the Barclays opened a fintech innovation center in New York City, and they flew in people from all over the world. There were probably at least 100 or 200 Barclays employees at this meeting. And the chairman of the board, he said, I want everybody to see what we're doing here. I want you to see the innovation that we're focused on, and because we need to innovate as a bank. And it's funny because the CEO, Anthony Jenkins, was supposed to be the one kicking off this event, but he got fired a week before by that chairman for not innovating fast enough at Barclays.
Well, there you go, right?
And so the chief technology officer and the chief operating officer, he fills both roles. He said, I get asked, what's the ROI on this? And he's like, I don't know. And which I thought you could hear nervous laughters in the audience. And then he put up a slide, and the slide had it had Apple Pay and Google Wallet down in the bottom. He's like, these guys are getting into the fintech space. It had, in the upper left, it had 13,000 fintech startups. And he's like, in the last 4 years, we've had 34 fintech startups that have reached $1 billion plus valuation, which is greater than the $30 billion market cap of the 325-year-old Barclays. And then he put up Alibaba and Alipay and Tencent, and he said, and then we have the Chinese, and they're getting into fintech, and we have absolutely no idea what they're doing. And so I thought it was very interesting that you're getting leadership from the very top of the bank, from the chairman of the board of Barclays, firing the CEO for not innovating fast enough, getting into this brand new technology, but having no idea what they're doing or what the ROI is going to be. So,
yeah, absolutely.
And even worse, now they're playing follow the leader. We've got Barclays, we've got UBS, we've got all of them deciding to play follow the leader and do something blockchain related. Do you see that as
nobody wants to get left behind, right? It's sort of like everybody's like herding together, everybody's bandwagoning together, and Apple and Google, they probably know what they're doing. They're pretty innovative compared to us as a bank. So why don't we just do what they do? It's maybe a little bit like that.
Do you think they're going to be able to do that? Let's just step back a little bit, and we look at Deutsche Bank, $40 billion market cap. Barclays is $30 billion market cap. Goldman Sachs is maybe 80, 90 billion. Same with Morgan Stanley. We got JP Morgan Chase, a couple $100 billion market cap. You take the sum of all the big banks together, and their market cap is about equal to Google's market cap.
Yeah.
And Google is only 2/3 the market cap of Apple. And so when you got Apple and Google, tech giants that absolutely dwarf these little but quote unquote big banks, have the tech companies really just turned the howitzers on these banks and decided, you know what, we're just going to obliterate them and we're going to innovate. And so the banks are just left like, oh, what do we do? I don't know. Well, don't start that again.
We should innovate like they innovate. Let's just do exactly what they do. That's the thought of what innovation means, in a very large legacy institution. And, honestly, with the bankers, you can't really blame them either because, throughout the history of banking, they've only made more money centralizing things and becoming bigger and bigger conglomerates, more and more bureaucratic. So for the most part, what they think of innovation and what, most people think of innovation is a little bit different. They are making some strides. They have these innovation labs where they pretty much try to run them like a startup. They give them tons of money and as little oversight as they possibly can. But, it's still, proving challenging for them. So whether or not they can actually build out this stuff, I don't think it's for a lack of talent that they're not going to be able to. For what I see, it's more of like a systemic issue with how large companies are run. It's just very hard to have this kind of very new technology that's extremely hard for them to understand and then, get it to work and then sell it to customers.
Yeah, they got too much inertia. So, what are we seeing in not just the Bitcoin markets, but just like all these cryptocurrency markets together? Because if we're going to talk about innovation, we kind of have to talk about everything that's going on. So, Bitcoin was kind of slow, not a lot of volume there, but I guess you'd put in your notes that like the Bitfinex BTC swaps were trading at a premium. Like, what's the deal going on over there?
Yeah, and that's actually a very rare occurrence. What that's saying is that people are taking out more loans on the swap book to go leverage short on Bitcoin than they are going long. So, at least this, the demand is pointing in that direction. So, it's kind of strange. This sort of thing happens every once in a while where the BTC swaps are trading at a premium. But for the most part, it's the other way around. So, maybe it's, actually that there's a lot of people taking out shorts on Bitcoin right now. So then, if the price actually did move against them, up to a certain amount, we can expect some margin calls and some type of cascade upward. But, it really is hard to say. Maybe it's possible that deposits for USD are all of a sudden a lot easier, and there's just a lot more dollars flowing into Bitfinex because they've proven themselves out to be fairly secure on the dollars front at least. So then they can it's pretty much like free interest, right? If you get like 20% on your cash per year, their counterparty risk can't be more than 10%, right, per year. So
we'll see.
You're getting a good 10% on that. That's not so bad, It's not so bad.
Yeah,
so.
Never a free lunch. What are some of these other signals that we're seeing from the altcoin markets?
Yeah, so I was thinking about, as a postmortem, looking at that spam attack on Bitcoin in July. So as I remember, it was like July 6th through July 10th. And there's this huge spam attack. It has to do with, having a lot of UTXO, transactions. So there's a lot of outputs and all these like dust outputs in these transactions, building out the mempool and slowing down sort of like how quickly the average transaction gets confirmed. Well, at least those ones, right? So, there's a qualitative difference between Litecoin and Bitcoin in that, according to a post made by Charlie Lee, the founder of Litecoin, Litecoin is actually immune to that sort of spam attack. And he actually had a pull request on Bitcoin to fix this type of spam issue 3 years ago. So, what I'm getting at is that during this time, it was also confounded with, the whole Greek crisis and the Chinese market crashing. So, Bitcoin and Litecoin were going up, but they went up very different amounts. So between the 6th and the 10th of July, we saw Bitcoin rise, from like about 270 to 290. So about like 7.5%, while Litecoin rose about, from 540 to about like 690, about like a 28% move. Wow. So maybe, and this is also confounded with, when the spam attack was happening. So it's sort of like all these different like positive, pieces of upward pressure against like the spam attack being negative. It's sort of like, Bitcoin moved 7.5%, Litecoin moved 28%. And then there's some like leverage ratio between Bitcoin and Litecoin. And it's like 1-3 or something like that. Or I don't, however it normally is. But if we take all of that information together, we kind of get a sense of how Bitcoin would have moved had there not been a spam attack and just riding on the Greek and the Chinese news.
Oh, so you're trying to figure out what the normal R-squared correlation coefficient would be, and then take the delta between that, and then attribute that to being the difference between the spam attack.
Right, exactly. So Litecoin and Bitcoin, they usually move in tandem, and Litecoin is sort of like a leveraged Bitcoin. Like when Bitcoin goes up, Litecoin goes up more. When Bitcoin goes down, Litecoin goes down more on average, right? But usually it's not to the order of like 4 times, right? So some of the suppression of the Bitcoin price moving up was that spam attack. So I want to try and quantify what that is, so that in some sense later on, if there is actually this fix in Bitcoin, like there's some pull request that's accepted, then we know what that pull request is kind of worth. All else held equal. Now, obviously, things aren't actually held equal, but at least maybe you're more right than you're wrong there, right? Like you have some sense of how to trade on that piece of news, just looking at like the issues on Git.
Yeah, very interesting. What about some of the other altcoins? I mean, are they just doomed? Like what's happening there? I mean, what do you think of those? Because I mean, we've seen some innovation in some of these, whether it's the CryptoNote protocol or Monero or different hashing algorithms, Quark. Like, I mean, what do you think of these things?
I actually like CryptoNote. I think it's pretty novel to have like ring signatures in the protocol itself, providing some better level of pseudo-anonymity than Bitcoin. So I think maybe that'll survive. It's at least innovative and unique enough that it's different, from Bitcoin. But there are some others where, I mean, there's just no way that they're going to make it, in my opinion. Like if you look at Megacoin, for example, when it first came out, they had a great innovation, which was their difficulty adjustment algorithm. They called it the Komodo gravity well. And what that does is it helps difficulty adjust more rapidly than Bitcoin standard algorithm. And that was really important for the time because there was a lot of merge mining happening on the altcoins, on all the different altcoins. And then a lot of hashing power would move between different altcoins very rapidly. So sometimes like this current fashionable coin, all of a sudden is, not as valuable or less fashionable. Everybody moves to a different coin and leaving the original coin with a very high difficulty and a very low hash rate so that, blocks are found really slowly. So they needed an algorithm to make difficulty adjustment a lot quicker. And, they came up with the Komodo gravity well. But, since then, Megacoin hasn't gotten enough traction to sort of protect itself as the incumbent, while at the same time, every altcoin that came out after it used some version of the Komodo gravity well. Like Darkcoin and Dash use the dark gravity wave, but, also has other innovations built on top of it. So if Megacoin's only real innovation was the Komodo gravity well, and it hasn't gotten to a size where it can just like sustain itself from its network effects, then ultimately I see it as being doomed because it's one innovation is no longer unique. And I would say the same thing for Quark too. I mean, if you look at Quark, they had 6 different hashing algorithms all chained together. But now this is sort of being very commonplace. You have things like X11, X13, where it's like 11 or 13 different hashing algorithms, along with other innovative features. Like I think Darkcoin has 11 different hashing features, hashing functions. So it's like what made Quark unique back then. Is no longer unique. So
why would that matter though? Like, I mean, is it just kind of, well, if one's good, two's better type of thinking, or is there actually like some type of security advantage to having multiple different hashing algorithms?
It was for 2 different fronts. So on one hand, it makes it more ASIC resistant. Ultimately, it's not actually ASIC resistant, but it makes it more ASIC resistant to have these different hashing algorithms. And the other thing is that there is some slight added security in that if any one gets compromised, you're still okay, right? Like if SHA-2 gets compromised, Bitcoin's not doing so hot. But if it was also had a couple other ones too, then you'd have to kind of compromise all of them. Or at least compromise the last one. I think that's how it worked. I think you got to compromise the last one on the chain, in that chain of hashing. I'm not exactly clear. It's been a while on that.
Right. So, getting to the meat, like where the traders can really have a lot of fun, Ethereum. It looks like the vaporware actually got shipped, and like, has that just been a trader's paradise? And where could people actually trade it? I think Kraken was the first exchange to list Ethereum, and then also Poloniex, right?
That's right. So I think right now the biggest markets are Poloniex and Kraken, and volumes have been pretty good for Ethereum. I mean, right now the only four, I guess, coins that have any volume, this week's been pretty slow, is like, Bitcoin, Ripple, Ethereum, and Litecoin. I mean, everything else is pretty slow. But yeah, I mean, Ethereum's actually gone up maybe about 10% since last week. So
yeah, but it's really the volatility that's been a lot of fun with Ethereum, isn't it?
Mm-hmm. Oh yeah, absolutely. I mean, it's sort of like living in the Bitcoin early days where, the swings can just be absolutely massive. I mean, when Ethereum first came out, you would see drops of like 70% in the span of like a few minutes or hours. I mean, it's sort of the Wild West again. So, which also brings the question of like, how do you actually do margin trading on it? On Kraken over here, we allow 2.5x leverage on Ethereum trading. But, obviously we have to put in a lot of risk controls to make sure that, account balances don't go negative. There's not too many, margin calls, that sort of thing. And, it's really something to manage when the volatility is that great. But yes, volatility, trader's paradise. There's a lot to do there. And it's a fun market. That market is definitely moving.
Yeah. Anything fundamental happening at Ethereum? Have they managed to keep their blockchain secure and not get attacked, or is consensus working fine? Like, what's going on?
Yeah, I think they might have run into some technical issues. Maybe like there was like 2 of them since they launched. But for the most part, I think everything's fixed now. I haven't been following it too well. But I got to say they shipped the product, and in the original
it's about
terms
time,
of
right?
agreement, yeah, it is about time. But in the original terms of agreement during the pre-sale, I mean, there were clauses in there that said, there's no guarantee that our product will ever come out as we've specified it, or even come out at all, right? I mean, there's like tons of disclaimers like that. So I'm just happy.
We'll just take your money and run.
Yeah, exactly. I'm actually really happy that they really shipped the product, and it is looking pretty good. It's looking pretty nice. So, I'm looking forward to, seeing how Augur does with its pre-sale. They're probably going to be one of the bigger apps on Ethereum, at least one of the earlier ones. And maybe it would be a great use case for Ethereum.
And what's Augur do?
Yeah, Augur is building out a decentralized prediction market. And
won't that be fun?
Yeah, it would be. I think it'll be a lot of fun. I mean, like in some ways, prediction markets are really strong, right? In that if the market is vibrant and liquid enough, it can actually change the future, right? It can actually affect the future and outcome.
Yeah, because it pulls knowledge in from everybody, and if somebody in the world has superior knowledge about something compared to everybody else in the world, whether it's the way they feel themselves or like whatever it is. And so the prediction markets are a great way to pull that knowledge out of everybody. I think Intrade, which actually got shut down by the U.S. regulatory authorities, it had been correct in predicting every major U.S. presidential candidate that got elected into office, and also the last time it ran with the Senate races, it correctly predicted 33 out of 34 Senate races. Why do you think that is?
I think it's probably you're pooling the wisdom of the crowds, right? It's like, there are these experiments where they do, you guess the number of marbles in a large jar, right? And you have like a whole auditorium of, college students guess, right? And you take the average, and it's usually within 1 or 2 marbles, if not exactly on the dot. So you're really getting something from this sort of like independent, sort of like crowdsourced information gathering. But yeah, I think even beyond that, I mean, you could make some really weird markets, right? You could say that, hey, I'm going to make a market for it snowing in a prediction market of what date it's going to snow in the Sahara, right? Which is like virtually impossible. And you can have a lot of people just bet tons of money on what day they think that's going to happen, right? And what that is really doing is it's crowdsourcing weather control, right? The invention of weather control. It's like people are saying, I know I'm losing my bet. I'm just throwing money into this betting pool. And then it's sort of like a prize for whoever can actually invent some device that causes it to snow in the Sahara, and that guy can, make the bet on a day that nobody else has bet on, and then just collect everybody else's money, right? But ultimately everybody benefits, right? Because all of a sudden now we have weather control and we can create snow in the Sahara, and maybe it was totally worth it. So you sort of crowdfund things through like a prediction market. I mean, I think it's a bit far off, but I think
and therefore the Augur tokens go up in value, and therefore you should buy some of them today because the discounted future value of those potential Augur tokens are going to be greater in the future than what they're valued today.
Possibly. I haven't bought Augur yet, but I might.
Assuming it's not going to be complete vaporware like Ethereum or MadeSafe or some of these other ones, right?
Right. Assuming that. I mean, it's all a gamble, really. I mean, this is like seed investing, right? Where most of it is going to fail, and then maybe you'll hit something that is great.
Personally, I haven't bought any Augur. I keep giving Jeremy Gardner a bunch of crap about it, but it might be fun. Maybe I should interview him for the podcast. Anyways, we've had a great wrap up for the week. I know it's been kind of slow, but maybe we found some stuff to introduce a little bit of fun and volatility for the listeners. Anyways, thanks for the time, and look forward to the next one.
Yeah, thanks for having me, Trace, and anytime.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.